Hey Taylor, how are you?
Hey Andy, I'm good. How are you?
I'm doing well. I'm doing well. Thank you for having me on the video today.
Absolutely. I'm excited.
Yeah, me too. So, what do you have up your sleeve? What do you want to discuss today?
Well, something that I have been dealing with a lot lately in my business is I've had an influx of buyers who are looking to use the USDA loan product. Something that I've noticed a lot is people are wanting to move to these more rural areas. Um, Especially in the Birmingham area, sometimes when you're able to move, outside the city limits of Birmingham, taxes can be a little bit better. But also just looking for space. I feel like since
Yeah,
the pandemic, you have two different people, right? You have the people who want the community that want to be packed right in there with everybody. And then you have the people who are like, I don't really want to be packed in there with everybody. I want to have my space. I want to have, half an acre or more. So they're moving outside of the city limits. But then I just also wanted to kind of talk about the benefits of a USDA loan. So I know you have some knowledge, obviously, being, a lender, on what requirements for USDA loans, what some of those benefits are. So I was hoping to be able to talk to you a little bit about that.
yeah, that'd be great. So, first of all, I'm going to say this. USDA loan is a fantastic product, and it is geared to help people who want to buy properties, rural properties, to be able to purchase them. And there's some great benefits that go along with the USDA loan. For example, someone can buy a home with no money down, which
Right.
is just tremendous. I mean,
Yeah.
that's a huge savings. And you think about it, even it doesn't even have to be for a first time buyer, but for a first time buyer, that's such an advantage because that's the biggest hurdle keeping people from buying homes is coming up with funds for down payment. So
Right.
USDA will allow a buyer to buy with no down payment. The interest rates are very competitive on those. The USDA they do have something, I'm just going to call it mortgage insurance, even though it's not really mortgage insurance in USDA terminology, but it's similar to that. And it's much cheaper than FHA. Generally, it's probably about the same as a conventional loan, the mortgage insurance on a conventional loan. So, these programs are going to allow buyers to be able to buy and have a very good payment and be able to buy these rural properties. Now, there's a couple of catches to these USDA programs or USDA programs. So, one of the things that we have to always look at is income. So,
Okay.
USDA does have income limits. They want the people who use a USDA loan to not make more than a certain income limit.
Okay.
And the question always comes up, well, what is that number? And I will say this because it's going to vary across the country, it's going to vary across the state, and all I'm going to say is that income limit can be found by doing just a very quick Google search.
Okay.
And well, I just gave a plug for Google. How about that? A very quick,
Maybe they'll promote you.
yeah, I'm not holding my breath for that one. A very quick web search, and someone can go on and just search USDA maximum income limits and
Okay.
then type your zip code in. And chances are you'll get a search result. If not, then you can scroll through those results and find USDA's website. And you can go onto USDA's website, navigate that site, and find that information pretty easily.
Okay.
The other reason I don't want to throw it out there is because it's going to date this video. And
Right.
I don't necessarily want to do that because those income limits are likely to be different next year
Oh
and the
yeah.
year after. So we want this to be a good video for years to come. So that's one of the things. And there's one other little catch in that income limit that we need to talk about. USDA considers all income earned in the household
Okay.
towards that income limit calculation. So let's say you have a husband and a wife, and the wife's mother lives with them.
Okay. So her,
Not,
whatever she gets.
yes, not an uncommon situation at all. And let's say that the husband was just going to do the loan in his name. The wife works part-time at the church on Sundays in the nursery, and the husband's mother-in-law she gets Social Security income.
Okay.
So we have to count the husband's income, the wife's part-time income, and the mother-in-law's income for Social Security as well. All
Got
of
it.
those are going to be added together and compared to that income limit. As long as those income numbers come in below that income limit, that criteria is met. So
Okay.
USDA is a little particular on that, but it makes perfectly good sense.
Right.
If you understand the reason for these loans, that it makes sense. So
Let me ask you this really quick, because I feel like
okay.
I run into this situation a lot where the husband and wife are living with the in-law in the in-law's home, but they're trying to purchase separately to buy their own place. Not the same scenario, right? They would
That
not
is
at that point
correct.
count the mother's income. Okay.
You are correct. Yeah, that's
Okay.
a great thing to bring up. It's only going to be the people who are living in that household who
Okay.
earn income. And that can be an adult child. Can you use the term adult child? A grown child. How about that? If you have a 16-year-old who's working part-time at the grocery store, or working on the weekends, or what have you. Maybe you have a child who has moved home after college.
Right.
Even though it's temporary, they're still living with you, they're earning income. We have to count that income number towards that income limit.
Okay.
So,
Interesting.
yeah. So the other thing that is unique with USDA loans is just what I told you a minute ago, in that these are loans on rural properties.
Right.
So, I'm going to let's use Mobile, for example. You and I
Okay.
are in Birmingham, but let's use Mobile, for example. So let's just say the city of Mobile is my fist, and you're going to come a certain limit outside of that most populated area. And from there out, those are going to be considered rural properties and will be eligible for a USDA loan. Now, obviously, it's not going to be a perfect circle. There's going to be a lot of cuts and ins and outs. And I
Right.
know you've seen this as well, but it gets kind of crazy when you're looking street level and you see one side of the street is not eligible, but the other side of the street is eligible for a
Right.
USDA loan. And so those are things that we have to look at on the mortgage side. You have to look at as a real estate agent. But again, a prospective buyer can go online, look at USDA's site, and determine, this rural area, at least in their mind, is it eligible for a USDA loan? And
Right.
so, they can get kind of an idea and say to you when it's time to go out and start looking at houses, well, hey, we want to go look in Bluntsville. We want to look in Coleman. We want to look in, you know, Kimberly or Morris, in
Right.
an area that is going to be out, I should say, within the USDA eligible properties.
Yeah, absolutely.
So,
Okay.
yeah, but
Yeah,
those,
and as a realtor, I feel like it's always my job too to make sure before we actually, if that's the product that my clients are looking for, let's not go look at the house unless we're sure that house is going to meet that requirement as far as location goes. So you're right, using the USDA website, typing in the address just to make sure that it's eligible is always a surefire way to know. So
Yeah, and that site is available for buyers to go in and type in an address. So if they see a house that they like, they can go to that. You and I use the same site. So it's
yeah,
not a special website that we use. They can go on the USDA site, type in that address into that eligibility or property search, and it'll tell them if that property is eligible or not. And
okay,
so, yeah, that's something that is a great tool to use early on in the process. And, I'll say this, you mentioned that, you know, it's important for you to know what program a buyer, a prospective buyer needs to go on. And
right,
that is just another example of how important that line of communication between you as an agent and me as a loan officer is, so that we don't end up with a buyer falling in love with a house that's not eligible for a USDA loan if
right.
they have to go with a USDA loan or if it suits them better. And so, that's something that's extremely important. And, I think sometimes that can be lost when buyers are using maybe a online lender
Right.
or,
Yeah.
a lender that's not local. Sometimes that line of communication gets broken and it gets it can break some hearts. Not only break
Right.
communication, but it can break some hearts if somebody falls
I
in love with the house.
agree. 100% agree, Andy. So I'm
Yeah.
with you. Do you, on the lender side, do you find, so I know sometimes with VA loans and FHA loans, sometimes sellers aren't always excited to get buyers who are using those types of loans because of the appraisal process and what lender required repairs might be. Do you find that USDA loans are similar to that?
Yes, they can be. And, that's the thing. The properties do need to be in good shape. They need to be in a certain condition. And, there's not going to be a lot of room when it comes to USDA loans to buy a fixer-upper.
Right.
So if that's what someone wants to do, that's their dream, is to buy a home and fix it up and make it their own. And I totally get it. I love doing that myself. This is probably not going to be the loan for them.
Okay.
So there's some other
Yeah.
options out there, and we can talk about some of those other options in another video
Yeah,
sometime in the
absolutely.
future if you want to.
That'd be great. I could use a little more education on that too. So always great. I will say though, I know that, I brought up how sometimes sellers get a little uncomfortable taking some of those loan products. But when we look at it from the buyer's perspective, having those kind of stricter parameters as far as like lender required repairs go, really protects the buyer too. So I just wanted to add
It
that in.
does. That is a great point. And I'll say one other thing just to add on to that. We can oftentimes take an application for a prospective buyer and strengthen that offer that they're going to make on a property, even though they're going to be using a VA or USDA or FHA loan. We can strengthen that offer by going ahead and getting that buyer totally approved.
Okay.
Because as well as I do, there's two parts to getting someone approved for a loan. There's getting the buyer approved or credit approved, as we will often call it. And then there's getting the property approved. And
Okay.
that's what you were saying, where a lot of sellers have those reservations about taking those contracts for those government loans like USDA, VA, and FHA. So we can at least eliminate the uncertainty that a seller may have about a buyer's qualifications or buyer being credit approved by going ahead and running that file through the automated, or not the automated system, but getting it completely through underwriting, so that an underwriter's reviewed their income, their credit, their assets, And the only thing that we have to do at that point in time is get the sales contract approved, the appraisal approved, and any secondary inspections like the wood infestation report, things like that,
Okay.
title, we would need to get those approved. So we can strengthen those offers a little bit. Of course, I hate to say this, they're still not going to be as good as that buyer who comes in to offer cash.
Oh, right. Cash is king.
But yes, but not all of us can afford to pay cash. So,
Right.
sellers understand that, and most sellers are going to have a mortgage themselves. And, you know, there's a lot of things that they look at when they consider multiple offers. So,
Yeah,
yeah.
absolutely. I guess, I don't know that I had any other questions as far as that goes. I feel like we've covered a great deal about it. Like you said, the biggest benefit that I find with, USDA loans is the fact that it's the 0% down. And then it does allow for seller concessions, right? Which
Yes.
is also a huge deal. So asking the sellers to pay, what's the percentage in closing costs for the buyer?
I believe it's 4%. Let me look that up. See, I will never claim to know it all. And
Okay.
so if I don't know something, I'm not going to just throw out an answer. But all right, goes to tell you, I just said I don't know it all. It is 6% of the sales price.
Awesome.
So
Which is a significant number when you think
it
of,
is.
yeah, when you're thinking of hundreds of
Absolutely.
thousands of dollars. So
Yeah.
up to 6% can be covered in seller concessions. So a buyer can almost get into the home for free with bringing no cash to closing, basically.
No cash to closing. And at that point in time, really all they would need would be funds to pay for their earnest money,
Mm-hmm.
to give to you, to give to the seller to hold their earnest money, or the listing agent. And then they're going to need some money to pay for their appraisal up front, and that's going to be it. So, and here's the thing, they can get those two items refunded back to them at closing by the
Yeah.
seller. And so when they go to closing, they can be walking away with keys to a house,
Right.
a deed, which is
Yeah.
awesome, and a check.
Yeah.
Hard to beat that.
I agree.
Yeah.
Well, awesome. Well, thank you so much, Andy.
Thank you, Taylor. I appreciate the opportunity to do the video with you today, and I'm looking forward to the next one.
Absolutely. All
All
right.
right.